Markets posted the straight sixth session of losses today as investors continue to fret about political instability at the centre. Now, the fears that reforms may take a backseat weighed heavy on the sentiment for all of this week, with the market shedding about 3.5%. For the day, the Sensex sheds about 57 points, while the Nifty ended the day at 5,651 mark. For a detailed market report, we are joined by Tanveer Gill, who gets us the insights and also the specifics on the market action. Tanveer.
Well, a close around 650 for the market on the index. We didn't quite conclusively break below that mark. However, the low point of the session was 5630. What was important is that for the week, we've lost about 3.5% for the benchmark indices, more than 5% for the mid-cap index, and severe cut coming in for the small-cap index. So there's been a week of a lot of carnage on the street, especially in the broader universal stocks. The market bet today was weak, and that was reflected in the mid-cap and the small-cap indices as well. The bank Nifty closed down the week with a 5.5% cut. That was pretty much the case with the real estate index as well, which lost more than 10% in this week. So culprits like Unitech, DLF, HDL, all of these stocks faced pressure. In the session today, there was a bit of a rebound in Bajaj Auto, Hero MotoCorp, some of the cement stocks as well, and some of the banks. However, on the losing side, you had a fair amount of unwinding pressure continuing for some of the large banks, the public sector banks essentially, State Bank of India that is, some of the cyclical names, Reliance Infra, Jayaprakash Associates, and of course some of the commodity stocks also felt the pressure. The sale issue went through, the offer for sale there, but that kept the stock in focus as well. For the broader market, like I said, the market breadth was weak, and we saw a whole host of mid-cap banks lose ground, as did some of the infrastructure as well as real estate names. Remains to be seen how we step into the new week. It's going to be truncated expiry week, and you're going to be looking at heightened turnover, which was already picking up in the last hour of the session today, as there was major squaring off of positions in the F&O side, and of course rollovers also into the next series.